Good morning, everyone. Darius Dale here to present our macro minute for Monday, December 20th, 2021. Starting with markets, we have stocks down this morning, commodities down, crypto down, dollar flat, global bond yields flat to down. Big movers, we have the Russell 2000, MSCI Emerging Market Index, the Germany's DAX Index, Japan's Nikkei 225 Index, and Bitcoin each down somewhere between 1.5% to 2%. Ethereum down 3%, WTI down 4%. On the economic front, the big news moving markets this morning was Senator Manchin's decision to effectively veto President Biden's 1.75 trillion Build Back Better legislation, which he announced publicly via Fox News. Again, mind you, this is a Democrat senator, so this is White House was clearly blindsided. There are a lot of sort of Democrat leaders from both Congress or both houses of Congress come out openly criticizing Manchin for his decision. But from our data-driven purview, this should not have been unexpected. We actually started taking down our risk to our exposure to commodities as an asset class going all the way back to the October CPI report starting on I want to say on November 10th or 11th as a function of anticipating this headline. We knew that the headline CPI print north of 6% would take Manchin out of these negotiations, and all we're getting now is confirmation of that. What's interesting to us, you have Goldman Sachs came out and pretty materially slashed its GDP expectations for next year. So clearly, this is not in economist consensus expectations, and it's something we've been talking about in our research for a couple of months now in terms of growth expectations for 2022 remaining way too high. On the economic front, in terms of data, more evidence of the post-Delta bounce in high-frequency economic data, more evidence that that bounce peaked in November. So we got Germany's EFO expectations index on Friday, minus 1.6 points to 92.6 in December. That's the lowest print we've seen since January. UK MTE manufacturing orders index that ticked down minus 2 points to 24 in December. That's the lowest we've seen in a couple months. With respect to today's probable range setups, nothing overbought or oversold. Although S&P 500, which is bullish VAM still taking it to the chart, is nearly oversold with just 30 basis points of downside versus 7.3% of upside. So if you're expecting a Santa Claus rally, or more importantly, if you need a Santa Claus rally because you do not subscribe to our research and you've not been appropriately managing risk throughout these effective crashes in a lot of commodities and crypto, then this would be a spot to start betting on that Santa Claus rally. Again, we don't think risk management should live in the fairy tale land of elves and Santa Claus. We think it needs to live in the realm of data and understanding how to react to changing probabilities with respect to our grid regime process. Going to WTI, that's bearish FAMS at minus 13% versus 7% of upside. Bloomberg Dollar Index bullish FAMS minus 0.7% of downside with 1.2% of upside. 10-year Treasury yield broke to neutral VAMs this morning, so be aware of that. If you're short bonds, minus 11 basis points of downside versus 21 basis points of upside. Bitcoin neutral VAM still minus 6% of downside versus 16% of upside. Ethereum neutral VAM still minus 9% of downside versus 21% of upside. And then gold neutral VAMs minus 3% of downside versus 1% of upside. So with that, Darius Dale presenting our macro minute for Monday, December 20th, 2021. Best of luck out there this week.